We had a Nasdaq divergence. This Nasdaq divergence is something which I teach inside Red Pill Uni, but it's a divergence across the Nasdaq. It's different. It's different to SMT correlated. SMT is slightly different. It's something which I personally developed, but I was looking for price to drive up to 21,440 at a bare minimum. If we also play into the fact that we're always looking for a PD array, a higher time frame PD array to support why price is going to reject a level, right? And if we're looking at where we were going into Wednesday hadn't really fulfilled anything, right? We were, failed just short of the lower quad of the weekly SIBI. So this top left-hand chart here is my daily, weekly, monthly. So I was always looking for it to get up to a bare minimum of the lower quad of this weekly SIBI all week, right? And if we flow on top of this, that we had our Nasdaq divergence, which was at 21,440, I was still anticipating higher prices come Wednesday. So we hadn't actually fulfilled anything up on this high. Nothing had actually been achieved. So again, just looking for a pullback to trade price higher, and I'll show you how I came to that in a minute. So if we just hop back to the daily, so if we looked at where we were, you might be inclined to try and pile into aggressive shorts. And the only day that I really looked for shorts was Friday. Principally on the idea of weekly profiles. So it's very rare that you get Wednesday higher week. It's unusual. If you're going to get it, you can get a Thursday decline and then a Friday reversal, or you can get a Friday reversal. So I was only really looking at Friday, which a trade I'll talk through in a minute, for my short, and that's purely based on weekly profiles, and also looking to seek a T-GIF on Friday. Traded it all the way back to mean threshold on the 15-minute. My runners got stopped. I was looking for price to get all the way back down to 21,244, which was a failed M5 con. But price pegged back up into our cracked gap for those inside Red Pill University. So starting off on Thursday, if we look at where we were in terms of the X levels, and if we're trading with the principles of X levels, where if you trade like me, we trade turtle soups into higher time frame X levels, we're always looking to be around a PD array in alignment with a higher time frame X level, like always, and we'd failed to do that on Wednesday. So again, just looking for pullbacks to trade higher, but looking to find a PD array to support that, right? So looking to get up into the weekly lower quad and that Nasdaq divergence. Wednesday, not anticipating Wednesday to be the high of week. So one of my approaches, and one thing that I'm looking for always, because I trade during London and I trade in New York, is if I'm looking for a continuation on a day, so higher prices, I'm always looking for a 15-minute order block underneath engineered liquidity or a breaker block. That's one of my primary approaches for trading price higher if trading through London. So what you want to do is you want to keep an eye on where does that M15 order block sit, and it's always the first M15 order block underneath engineered liquidity. Engineered liquidity is where the market will engineer stop orders as price is moving higher, for price to then come and sweep to accumulate to drive price higher. That is what's known as engineering liquidity. So all below these lows you have stops, right? People are buying. In order to get out, they have to sell. Well, if someone's got to sell, smart money buys. So that is engineering liquidity, taking what would be internal range to go and drive out external range liquidity, right? So for me, I'm always looking to take internal range liquidity, to essentially purchasing in with the smart money on a 15-minute order block underneath engineered liquidity. So if we hop to our 15-minute chart, I'm always looking at the first 15-minute OB, right? So this 15-minute order block that we have right here, that on itself isn't necessarily enough. And what I like to do is build confluence around that. And so what we actually had on this particular day was I believe it was a 5-minute, I believe, was it 15, 5 or 15? I can't remember exactly. I think it was an I can't remember off the top of my head. I think it was RTH gap. I can't remember off the top of my head, but it was an upper quad of an RTH gap. Previous day's RTH range potentially. Let me just double check. So I can't remember off the top of my head now. So what we're going to look at is if we're anticipating high prices, right? Again, bullish price. You're always going to be looking at the previous day's RTH range for me, and you can utilize this as like a guide for dialing in your PD arrays, right? So if I'm anticipating higher prices, like I'm anticipating bullish expansion still, I'm going to be looking at the upper quad and 50% of the previous day's RTH range, right? There's other things we can overlay on top of that, RTH gaps, which is slightly different, but this is the previous day's RTH range. So you can see here that we align with being at essentially equilibrium of the previous day's RTH range, right? So it helps supports that 15-minute OB is kind of your where you're looking for price to drive higher with the principles of sweeping that engineered liquidity into the previous day's RTH range, but also in alignment with that model and approach. All right. Now there's other things we can overlay on top of this, right? You know, if I am looking to drive price higher, again, I'm always looking back through Thursday, through the London kill zone and ask myself what has actually been achieved during the London kill zone that would support bearish continuation. Because if I'm bullish, I want to make sure that there isn't confirmation on the high as to why we would be in what would be essentially a sell day, right? Now, one of those telltale signs is having a key on why that London high is going to hold. Right? Yes, you could argue that you have a breaker block on the high. Well, as I've just mentioned, I'm anticipating bullish expansion to at least get up into this lower quad on the weekly. So I'm not anticipating this to hold. We've also got relative equal highs sat on Asia, and we also had a wide S&T divergence up on that high. So I wasn't looking for price to necessarily hold the London high, but again, still not quite enough. Technically, you do still have a breaker block, so it could reject from there. We can use standard deviations. I'm not going to go into that topic today, but we could do. But the telltale sign for me is that price had never at any point got back to fair value or a premium of the London dealing range. So if you're ever going to be looking for a sell day, 9 times out of 10 you're going to be finding yourself going back into fair value or a premium of the London dealing range if it has not done it during London. So if we look at our London kill zone here, which is delineated in this blue box here, which also comes with the X levels indicator, by the way, we can see that price had never revisited a premium of the London dealing range at any point. So if you just take this high to this low, it never came back to a fair value. At no point did it come back to 50% of the London dealing range. At no point. Okay, so even if I was anticipating price to go into a sell day, I'd be looking for it to get back up into either a premium or fair value of the London DR for continuation. And that would be based on the principle that the London high was going to hold. So you'd be holding it off the breaker block. Well, as I've just mentioned, I'm not looking for the London high to hold. And price hadn't got back up into fair value or a premium of the London DR. So all I'm going to do is trade from my higher time frame PD array and trading it back up into a fair value and a premium and holding runners to take out the high. That becomes my objective, right? So for those who are trading with me live inside Red Pill, this was my exact entry on that day, and I can find my trade. One sec. Where are you? What was this Thursday? I think it was this day. So 21.2. That wasn't that one. Yeah, so this was my trade on this particular day. So I caught the entire daily range on this day. So right down in at 21.2, right? So 21.2 and then scaling out. Okay, so I was stopped out initially. So the way that I trade is that I trade hyper aggressively, and then if I always have to give myself two opportunities at a trade idea. People inside Red Pill University will know what I'm looking for on the second attempt at my trade idea. But trading price all the way back up to my final objective, which was 21.437, which was that Nasdaq divergence, right? Just short of. So trading all the way back up into the high. I'll show you what happened to me, and I'll talk through this day because I was actually in. No, not that one. I was actually in full position here, scaled out, and at this point I had one contract left, which was this contract, and I put it below a breaker block because this was going into PPI. It actually wicked my runner, and And then if you were trading live with me on this particular day, you can find it on YouTube. I traded this day live. We were looking for the 1050 macro to trigger our expansion. As soon as we got the trigger at 1050 and ES went in gap fill, that's when I entered to go and drive up for the final doll. So just talking through this day, this is where I'm entering, right? So inside of my 50-minute OB, underneath engineered liquidity with the context, price had never got back up into London fair value or premium. I'm going to pay myself inside of a premium. Why? Because if price is going to go into a sell day, i.e. continue down, it's going to reject a premium of the London DR. I promise you. Okay? So just purely talking on the principles of schematics and schematics alone, right? If I'm now inside of anticipating what is essentially a full-blown reversal, so what would be a buy day, okay, I'm going to be looking for my sweep pre-830, and then all I'm going to be doing is looking for a pullback into a discount, okay? Okay, and I'll show you how this aligns with X levels in a minute, but this is purely on the principles of schematics, right? So all of my entries are going to be found in here to go long. I was actually wicked out, and I'll explain why. On my runner, and I re-entered inside of here. All right. Now there's an M5 continuation model on this low. Now I had a private mentorship session yesterday that I held, and I was actually, the reason why I held my runner too tightly was as follows. It's actually to do with my PPI model. So my PPI model is a breaker block. You anticipate at data to wick out both sides of the market. Then you look for it to pull back into your range going into the open. And at that point, you're looking for your breaker block to hold for continuation. So I actually have my runner literally just below the breaker block. It came and wicked me out. And as we know, wicks do the damage, bodies tell the story. Okay, so I actually got my runner got stopped at that point in time. And the reason why I held it too close was because I was mindful of the failed M5 con for those inside Red Pill Uni. I was conscious of this. But when I was having a private mentorship session on Saturday, when I was coaching this guy, he reminded me, he let me know that MNQ had actually hit the upper quad, which can prevent NQ having to come back down to it. Again, still for me, I would have wanted to have seen price come back into at least the upper quad of this M5 BISI for continuation. And if you were trading live with me on this day, this is what I was anticipating price to do on data. They wick into this M5 BISI for then drive higher. As it didn't do it on data, I was anticipating it to do it at the open. It didn't do it, but it did wick me out. That was me just choking my runner too tightly, anticipating it to come back into this BISI. I was actually in down here, so theoretically I could have just left it, but it's one of those. It got the better of me on that day. So going back to the principles of schematics, right? If we're looking for continuation, we're going to be looking for a pullback into a discount of the sweep between 830 and the open. Okay, and all of your entries would have been found inside of here. Then we're just going to use our projections to find our final TP and our higher time frame doll. Okay, so if we were talking about the weekly lower quad, bingo bongo, right inside of here, which is where I scaled out. So far, has anyone got any questions? Anybody got any questions so far? I appreciate I'm rattling through it, and if you're new or you don't know what I'm talking about, now's a good opportunity to say what's up. All right, because all of this stuff is bog standard for me. If you want me to go over certain points you don't understand, let me know. Or if you just want to sit there in silence and eat popcorn, that is also cool. Whatever you want to do, it's your Sunday. It's your Sunday, right? It's not my Sunday, it's your Sunday. You do with that as you please. But if you want help, I'm here. So if we go back to the principles of X levels, so now we can start overlaying X levels on top of it, right? Well, I know that I'm going to be looking at the London DR, and price had never got back to 50% or a premium. Okay, so all I'm now looking to do is utilize the principles of X levels, right? So if we just hop back onto the one, if we just rewind this back into here. Okay, if I'm entering aggressively down here, all right, and which is what I do, and you'll know what my triggers are and what I'm looking for inside of RP, right? But this is an extension, so don't worry about this. In fact, I'll get rid of it. what you're going to be looking for is a break of structure on the 1 minute, or you can either go down to your lower time frame and look for your 15 second. I have an execution pane which is on my 15 second. Okay, so I'm always keeping an eye on my 15 second. Well, I know that this is a 15-second break of structure on this low. Okay, this is a 15-second DR, that very high there. Okay, so this now becomes BPR or your 2022 if you want to trade it on your 15 second. But if we look at the 1 minute, this is now a premium on the 1 minute. Okay, it's a premium on the 1 minute. This would be a discount on the 1 minute because this is a bearish 1 minute dealing range. But if you're now looking for a change in the state of delivery, you've got it there on the 15 second, but now next would be your 1 minute, right? Because you're looking for your 1 minute to go. So what you can do, if you're a scalper, which I'm not, but enter inside of your premium after your break of structure on the 15 second, pay yourself inside the 1 minute, discount, and wait for the 1 minute to break, at which point this is when you can start getting your high probability breaker blocks, right? So if I just hop back to the one, like on the 1 minute, none of that's clear, but on the 15 second, it's clear as mustard, right? So here, if I'm looking at this on my 1 minute chart, I'm going, well, I know that I'm in a 1 minute premium, right? I know that I'm inside my 50 minute OB, and I've got everything else that I need to confirm my trade, which is taught inside Red Pill Uni in here. So now I'm just looking to drive price higher. So the principles of X levels is from your higher time frame point of interest, right? And this is 12% on the daily. Okay, 12% on the daily X levels, which aligned with the M15 OB and the upper quad of the previous day's RTH range. I'm now looking to drive price back out. The first objective is going to be up at the 5, right? This is your how price moves. It goes 1 minute, 5 minute, 15 minute, H1, daily, weekly, monthly, in that order, and it just moves through them. So after your 1, you're going to be going into your 5. Well, we know that we're basing it off the London dealing range. That price has never got back into fair value or a discount of the London dealing range. So I know that this 5 minute high is going to go. I just know it is. Okay, so what we can do is, if you want to, you can pay yourself inside the 5 minute X level. So what you look for are inefficiencies in price within inside of a 5 minute premium. Okay, it's actually a discount because this again is a bearish dealing range. Bearish dealing range. So this is again a premium on the 5 minute, discount on the 5 minute. All right, so inside of here, that is a discount on the 5 minute. So inside of here is where you can start hunting your inefficiencies. Well, we know that this is a weak high. Price never got to 50% at this range. More likely to come revisit it. So this is where I'd start hunting, if I wanted to scale out, a PD array in alignment with the next level for me to scale out. Okay, well, if I'm anticipating it to take out this weak high, I'll be at 79%, right? Inside this little 1 minute SIBI. Inside this wick on this order block behind this SIBI, classic support and resistance, right? In the Old Testament. Okay, taking price back up into a discount on the 5 minute. Okay, and the reason why I do that is because I'm an aggressive trader. I'm a primary entry turtle soup trader. I have to pay myself inside of a 5 minute premium because that's often where you'll get offset accumulation. And that is where 9 times out of 10, you're going to get your secondary entries. So people who like your inverted fair value gaps, people who like your higher time frame breaker blocks, that's where they're going to be entering. I'm already paid before they enter. That's how I trade. I like to have my money banked before Twitter enter the market. So trading price back up into a 5 minute discount is where you can then get offset accumulation as a primary entry trader. Okay, so that's where price comes all the way back down into a 5 minute premium, and that's where you would hunt your secondary entries, your breaker blocks, your inverted fair value gaps, your 2022 IF models, yada yada yada, right? The reason why I pay myself here is I can parlay in. I'm paid, parlay in, continue, or I'm in, pay myself, leave my runners where they are, and just let it go to my final objective, which in this instance would be to come back up to 50% and then into a premium of the London dealing range, and then just holding runners for my final objective. Okay, and utilizing standard divs for that, right? And also the principles of X levels, right? So if we look at the hourly, okay, and the 15, if we break the 5, which we're going to anticipate to happen to get up into mean threshold of the London dealing range, anticipating a reversal, the next objective is going to be your 15 minute. Okay, well, the 15-minute dealing range, X level dealing range, aligns with being a premium of the London DR, right? Starting to make sense? So if price is going to fail, it's going to fail from the London premium in a sell day. It's really simple stuff, guys. So we can look at this and we can clearly see that this is an unmitigated range, right? A high probability order block is an unmitigated range. I'm not going to go into mitigation, unmitigation here. But this range right here is unmitigated. So again, 70.5 on the 15, just below that mitigation, would be a sensible place that you would look to at least have 80% of your position off. And then at that point, it can do whatever it wants. It can continue up to your final objectives, or it can reverse and you can fail your position, and it can turn into a sell day, right? It doesn't matter at that point. You're paying yourself where the model can fail, right? So we know that we're inside of here. We've seen our 15-second break in market structure. We're anticipating the 1 to break for a change in the state of delivery. We're looking to take it back up into a 5-minute where we're going to pay ourselves, because we know that's where offset accumulation can take place on a primary entry. And then we're going to look for continuation to take out into fair value. That will be our next trim, because we're looking for price to get up to fair value or a premium of the London DR, because it hasn't done that during London, and that would safeguard us against a potential sell day. However, we're still bullish and we're looking for the highs to be run out for the reasons I mentioned at the start of this episode, right? So if we press play, we're in the trade. We're not doing anything. We've already got the triggers and everything that we're looking for. There's nothing left for us to do, right? There's literally nothing for us to do. Inside of here, you have my M5 comp model. It would have just missed you a fill. You did get the fill on MNQ right there, but not on NQ. Okay, so right in here is where now I'm paid. Okay, right in here I am paid. Okay, so if you're entering where I entered, which is mean threshold of this M15 OB, took an initial stop on this wick and then re-entered right in here for the reasons Red Pill University members will know. I've now got in from 21,204, right? And you think I'm talking in hindsight. I'm not. This is my trade, not that trade. All right, this is my exact trade. I'm talking you through my trade. I'm taking it back up into a premium on the 5, right? Right into here. Okay, because I know that this is where price can offset accumulate. I know it's where it can offset accumulate. So for example, this is where you get your secondary entries. Okay, so if you're looking for your breaker block, all right, down back inside of here is a unicorn. If you were hopping onto your 5, tiny little inverted fair value gap in here. It's essentially what it's just tapped into there, right? But this is where you can find your secondary entries, whether it's balanced price range or whatever, right? Red pillars will know what this is, all right? All inside of that is where you start finding a secondary if you want to parlay in. However, in this instance, I didn't parlay in, I just held my position. Okay, so exactly what I've just mentioned, offset accumulation from your 5-minute discount, right? Now you're just looking for continuation to get back up into where the model can fail, taking out the 5-minute. So I asked a question on Twitter about, well, I don't know, 3 weeks ago. Does anyone know where nowhere liquidity sits? Does anyone actually know where liquidity sits? Everyone talks about liquidity, like, oh, liquidity, liquidity, liquidity. Does anyone actually know where it sits? Without a shadow of a doubt, where is liquidity? Does anybody know? Big arch. Highs and lows of dealing ranges. Absolutely. The highs and lows of X level dealing ranges is where liquidity sits. It's where liquidity sits. Nowhere else. Nowhere else. So in between the 1 minute DR high and the 5 minute DR high, the only thing that is in there is not liquidity. It's not liquidity that you're looking for. It's inefficiencies in price. Inefficiencies. It's not liquidity. It's inefficiencies. Your liquidity is above the 5. So if you were looking to short between 1 and 5, you're looking for inefficiencies to short. Okay, because in between every single dealing range, this is a 1 minute dealing range, this is a 5 minute dealing range, this is a 15 minute dealing range. There is a premium and a discount side to every single dealing range. Premium, discount, premium, discount, premium, discount. And price will just go like this until it gets to a new higher time frame POI, and then you revert the system. Goes back out this way. Look familiar? Okay, that is how I built X levels. Right, this principle of dealing ranges. Okay, so liquidity is sat above that. Okay, so if I just reverse to this, if we're looking at our premium and discount, above here, the 1 minute DR is liquidity. In between the 1 and the 5 is inefficiency. Above the 5 is liquidity. Between the 5 and the 15 is inefficiencies. Above the 15 is liquidity. Between the 15 and the hourly is inefficiencies. Above the hourly is liquidity. So all you are doing is taking price from a premium to a discount and vice versa, seeking inefficiencies in liquidity and price. That is ICT. That is it. There's nothing else. Everything you overlay on that is makeup. Right? It's just ways to get into a trade. That is it. So if I'm now looking for range expansion, I'm looking at the liquidity. But if I need context for why that liquidity is going to be swept, and as I've just mentioned, price never came back to 50% or a premium of the London DR. So even if it was a sell day, you'd be anticipating price to revisit it. And we've also got my model of a 15-minute OB underneath engineered liquidity, anticipating high prices to get up to the lower quad of the weekly SIBI because we had a Nasdaq divergence up there. Right? If you think this, we're just talking, this is a little model that we found on Twitter, right? There's far more to trading than that, right? You have to know why your low is going to hold. I know why this low is going to hold more often than not, which is why I'm going to trade it. I then need to know why my high is going to be ran, not just because it's a DR high, but why is price going to run that high? Okay, so the context that supports why that high is going to hold or that high is going to be ran. And then I also need a model and an entry to get in an alignment and capitalize on that move. If I have those three things, I have a trade set up. If I can't answer them all with a clarity, I don't have a trade, guys. It's that goddamn simple. And if you're just trading models purely on the basis it hits a fucking indicator level, you're never going to be successful at trading. And I promise you, you have to have reason to why price is going to do something, not just because it hits a level on an indicator. It's ridiculous. Okay, so we're now looking for expansion for it to come and take out the 5-minute high on the X level dealing ranges after offset accumulation from the 5-minute discount. As I mentioned, that's where it would happen if you're a primary entry trader, and we're looking for price to get back up into a premium of the London dealing range that aligns with being in a 15-minute premium, right? Inside of a 15-minute premium, with the potential that this is where price is going to reject if it's going to be a sell day. Okay, if we actually consider where we are on the hourly dealing range, we are still inside of a fat premium. Okay, so if I am bullish and I'm in a premium, I'm going to be wanting to take price from a premium back into a discount if I'm looking for a reversal, right? So here we are inside of a premium still on the hourly. Okay, so we came down to 12% on the daily on the X levels, aligned our PDRA with our supporting confluence, and now we're looking to take price back through the dealing ranges as we're changing the state of delivery, right? But we're inside of a premium on the hourly, higher time frame premium when we are bullish. Okay, so now we're looking for price expansion. Okay, there's nothing else to do here. Okay, the only thing I will add is, okay, projected range. All right, well, if I'm looking to come and take out and get into what was my objective for the day, which was up at 440 for reasons I've just mentioned, is projected range. And projected range is where I'm always looking to be entering in the lower 25% of projected range. As soon as I get above that, I lose interest. I'm a primary entry trader. I don't trade secondary entry trash that you see left, right, and center. I personally don't trade it. The risk is far too wide, and there's better ways to trade with lower risk. Like, you will never see me do this sort of shite. Like, it makes me tweak. Right, as soon as we, or you know, if we're going to find an entry in here and start doing this nonsense, like, I just don't trade like that. You know, this, I'm not even shitting you. This was my trade. That was my trade on this day. That's how I trade, right? And I sit patient and wait for the price to come to me to capitalize on that. Okay, but we're now looking for price to expand back up into our position. And by the way, what I'll add is, if you are trading daily range, you can't be tweaky, right? You can't be a tweaky individual, right? And what do I mean by that? You can't be somebody who enters their position and shits themselves in 2 minutes, right? If you're like that, you're probably better going to Dave FX and learning how to scalp. Not that he can, yeah, I won't even say it, but you're probably better off going to learn how to scalp. Probably not from Dave FX, but you're probably better off going to learn how to scalp. You've got to be able to learn how to sit in a trade for hours if you want to capitalize on daily range. It can take an hour and a half. It can take 3 hours. In some instances, I'm in a trade for 4.5, 6 hours. It takes time to deliver. What you need to understand is, if you are trading range, is how to scale out. X levels tells you and shows you how to scale out. It's fucking simple. Inefficiencies, liquidity, and price. Okay, and then just have context for why those highs are going to be ran. Okay, so we've now, let's get rid of this nonsense. We're now looking for the 5-minute high to go. Our next trim is going to be fair value of the London dealing range. Okay, ultimately looking to get it up into a premium of the London dealing range, because as we know, that's where price can fail if we are going to move into a sell day. We have an unmitigated range, and we're looking for price to get up into mitigate that range, which is going to be at 70.5 on the 15-minute. Okay, so right there, bingo. Right now, you could literally just terminate your trade here. You could terminate your trade here and just be content with that. Okay, you could do, absolutely, you could do. So you know, if we're looking at this pure scope, this is 209 up to 312. It's a 100-point trade, all right? Pretty down, you know, down the middle. Not awful, not amazing, just down the middle. Right? You could terminate that trade there and be content. Or you're going to have to weather a pullback. You're going to weather a pullback. You're inside of a London premium in the potential for a sell day. The chances of it blowing through that is highly unlikely. So this is the next stage when you're coming into your analysis. All right, this is the next stage when you're coming into your analysis. Now I'm going, okay, well, if I'm in a buy day and price is now moving in the direction that I want it to move, which it is clearly, I want to start looking at the market structure that's taken place and what's actually happened, and what can I do to align with my schematics in order to drive price higher. Okay, well, this was actually PPI. Okay, and I called exactly what was going to happen during PPI, which is what essentially happened. Taking out both sides of the market, pull us back into the range going into the open. Bog standard PPI. But what I'm always looking at is a breaker block to form pre-PPI, and that is created on the PPI wick. This becomes what I'm looking for as my line in the sand for price to drive higher. This series of candles on the data. That's what I'm looking at. And what I'm looking for is confluence with ES for this breaker block to hold for higher prices. Now, that's one thing which is overlaid on top. All right. The second thing that is overlaid on top is, okay, well, I'm looking for my sweep pre-830 because my sweep pre-830 creates my line in the sand. It's my new buck stop that I'm not anticipating price to go through in order for higher prices. So this low becomes my buck stop low. Now, as I mentioned at the start of this episode, I trailed my runner too tightly. I re-entered. I'll just show you. God dang it, where are you? So, not that one. This one. So I trailed my runner too tightly. So you can see I was in down here. I took a small L initially. I take 2 opportunities of trade idea, scaled out where I just mentioned on the 5, and then scaled out up here, which was inside the premium of the London DR. I then had my runner stopped, okay, and this was on me, okay, and I'll tell you exactly why. I re-entered in here to capitalize on the final move of the day, but I'll tell you exactly why I got stocked out on this whip. So this here is my PPI model, and I'm looking for my breaker block to now hold, all right, after this candle. So essentially what happened is I decided to move my stop into here, and the reason why I did that is because this was a failed M5 comp, right? Did I even measure it right? Oh yeah, no I did. The blues throwing me off. So it was a failed M5 comp, right? So I was anticipating price to want to wick into this. Now for me it was dumb because my entry was in here and I was anticipating it to come into this, which wouldn't have invalidated my trade. Don't ask me why I moved my stop up into here. Don't ask me why I did it. I know why I did it. Because I was utilizing this to be my low and this to be my high and then my breaker block and not wanting to break the breaker block. That was on me. I choked it too tightly. Okay, no problemo. But if you had anticipated this to be your low and not come back and take out this low and get back into this M5 BISI, this now becomes your buck stop low. Okay, so if we're looking now at X levels, we know we're inside a premium of the London dealing range. We know we're inside the 15 of the X levels. Well, this is where we are now back inside of a higher time frame premium, right? If we look at the hourly, where are we on the hourly? 62% to a tick. Okay, so this is a discount on the hourly. We are in a discount on the 15. It's a higher time frame PD array in alignment with a higher time frame discount mitigation, right? We're inside of a premium. Okay, and as with X levels, anything which is M15 and above is classified as a higher time frame. Anything M15 and above, anything M15 and below is not classified as higher time frames. M15 and above. So we've taken our price from a higher time frame POI, 12% on a daily, inside of a upper quad of this H1 BISI, upper quad, mean threshold of the previous day's RTH range, M15 OB underneath engineered liquidity, anticipating higher prices because London failed fair value and a premium of the London DR. Even if we're in a sell day, that's where it's going to reject, but we're anticipating the highs to go because we're looking for it to get into the lower quad of the weekly SIBI and take out the relative equal highs on Asia high. Right? But now you've taken price all the way back up into an M15 and hourly discount. Well, of course, this is now where price can reject. We're back inside of a higher time frame X level in an alignment with a PD array. Right? Okay, so what ends up happening here is we get a fight between, we have an M15 premium. This is our breaker block that I'm looking to hold. My PPI model. Get rid of this. And we have our discount. Right? All right, we have our premium discount and our premium on the 15. What you do not do on the 15 when you're anticipating accumulation, which if you're trading the PPI, you're going to anticipate price to come back into the range, is you do not enter in between 38 and 62%. You are liquidity. You have a massive target on your head which says I've entered too early. Okay, you don't do it, especially with the PPI model. You're going to wait for the open. So what happens is we just chop between a discount and a premium of the 15. That is the exact wick that took my runner. Okay, on this breaker block, the exact runner. So at this point, I noticed that we are accumulating, right? We're accumulating, we're not moving, we're going back and forth. We're just chopping between the premium and the discount of the M15. Okay, that's cool. That's no problem. Just taking liquidity of both sides of the market, just engineering, right? When price does that, what macro are we looking for? I am covering it, JJ. I covered it this morning on this particular the days that I'm covering today, Thursday and Friday. What macro are we looking for? If we're chopping at the AM, what macro are we going to look for price to deliver our distribution? 1050 macro, absolutely. Okay, so if you're trading with me live on this day, all morning I said don't do anything until 1050. Right in here, you have what you need for your continuation at 1050. Your divergence on that low comes in. Okay, there's your confirmation of higher prices. So on this particular day, okay, if you hop between, and by the way, this was going premium discount not only on the 15 but also on the hourly. If you go to ES and you look at this same day, we were looking at the RTH gap fill, and I said, and the RTH gap fill was somewhere up here on NQ. I can't remember exactly where it was, but it was in there somewhere. And I said, if ES goes and gap fills, we're going for our target. Okay, and ES's gap fill at the time, because it was stronger on the day, was like in here somewhere. As soon as ES gap filled on this day, I went long because I knew it was going to pull NQ up to go and at least go and gap fill, and I knew at that point my objectives were going to be met. All right, because I know we've got then confirmation that we've got a failure of a sell day, and we're going to go and run out these rails and also get up to my final objective using the SDs. All right, so the 1050 became the trigger for the long. Now, if we go back a moment and we're talking schematics. If we take this low to this high, so the 830 sweep pre-open to the high going into the open, you can see how the discount side of the 15 aligns with your discount in terms of from a schematic perspective, right? So again, supporting where you'd be looking to go long if you were moving price higher. So funnily enough, right, if you actually look what took place on this day, you had a fight between a sell day and continuation. So if you were looking for a sell day, right, you'd be looking to pump in shorts here inside of your premium side of your London DR, and that would be on the principle you're anticipating the London high to hold, so you'd had to have had confirmation as to why the London high was going to hold, right? Right. So inside of here, you're going sell day, buy day, sell day, buy day, right? It's a fight between a buy day and a sell, right? But we're bullish, so we're going to be entering inside of a discount on the 830 sweep to the high from a schematic perspective. From an X level DR perspective, we're actually inside of a premium on the hourly and the 15, looking to come and take out the 15-minute high, because as we know, our liquidity sits above the DR highs, right? Okay, so at this point, we're now right in here. I was in here somewhere when ES gap filled. Now it's just a case of just letting it go, right? There's nothing else to do, right? So if we just go back to my trade, I'll keep selecting that one. It's not that one, it's this one, right? Now it's just a case of letting it go. So where was I in? 21,327. I was in here, right? All the way up to 437. It's my final trim, right? Which was the Nasdaq div. Okay, so now it's just a case of just letting the thing breathe, right? There's nothing else for you to do. And if we just finally touch on the principles of lower quads of projected ranges, you can see here this came back into your lower quad. So if you wanted to sniper entries, this is your lower risk buy. inside the lower 25% of projected range. Okay, as soon as we have now broken 50% of projected range, which is essentially here, I was literally on the cusp of that, which is why I entered. The cusp. As soon as we get above 50%, I lose interest. I'm done. I'm out. See you later. Goodbye. Day over. Day done. And I'll often say I'm done for the day. See you later. Good stuff, RP. Bish, bash, bosh. All right. As soon as it's above that, I'm out. I've got no interest. Why? Because that's where you can start getting gnarly retracements where price comes all the way back down into here before it goes off again. I've got no interest in doing that. I've got none. All right. I'm in down here and I scale out my positions. I'm a scaler. I scale out. Okay, so we've now gone and taken out the 15. So we've now got a new 15-minute DR, right? We've got a new 15-minute DR. So at this point, you can see that our breaker block held in terms of our PPI model. All right, and we're just scaling back out through the dealing ranges. So we know we've taken the 15, right? We know we've taken our 15. So if we're taking our 15 and we've taken our hourly, what we're going to be saying to ourselves, okay, well, where in God's name could price be going? Well, what X level do we have in alignment with a PD array that could support bearish price? Well, hello, 29.5% on the monthly DR, right? That's the only thing we have left. Or 21, 12, and 0, taking out the monthly high. We've taken them all out. Right, all the liquidity is gone. The only liquidity that is left is up here. That's all we're going for. If you go and cross onto your lower time frame, you'll find DR in here, but that's not X level liquidity. Okay, so it's against the same thing. You're looking for inefficiencies in price. Well, where's the inefficiency? A big fat weekly SIBI. Lower quad.